education wise, I was a civil engineer undergrad. I was a MBA finance, and my day job has been in commercial construction, and then went into retail construction management for large corporate clients. And then while I was kind of doing my day job, which was doing that, I started buying property. So I bought my first 3-flat in Wrigleyville in 2003. Then kind of lived there, kind of did the house hack before it was called house hacking. And then I, got married, started a family, went to the suburbs. And then in 2010, I started buying again. And I bought basically 6 buildings between 2010 and 2013, complete gut rehabbed all of them. And so I was doing basically BRRRR, where I would buy them, gut them, and then cash out 6 months later after they were fully tenanted. And then I bought a 2-flat in 2018, and that was the last one I bought. So I'm at 8 buildings, 31 units right now.
All right. Thank you for clarifying that, man. 8 buildings, 31 units. You said from Pilsen up to the north side, and I know you're in different neighborhoods on the north side as well. You mentioned that you kind of were doing this while working a full-time job, right?
Yes, correct.
And do you self-manage or do you use third-party management?
Yeah, I self-manage all of my properties. I do have a maintenance guy that lives in the basement of a unit. And so he has a much lower rent, and he'll really help me with the turnovers is the big thing, as well as random, repairs, maintenance type things, lockouts, that type of thing, because I'm in the suburbs. But so he just kind of helps me out with that type of thing. So,
all right. So you don't live in any of these units right now. You're in the suburbs. You have a maintenance guy who kind of helps out, and you have a day job. How do you manage all this?
yeah, it's a lot. I also have my broker's license, so I'm a Kenton really good. So I do residential real estate as well. But so my day job, it's nice because it's remote as well, and so it's fairly flexible in that regard. So I will sometimes be doing work emails at say 6 or 7, 8 o'clock at night, normal stuff if I need to do something during the day. But it's pretty much 7 days a week. I'm doing something, whether it's during the day, at night, etc. But the good thing is when I got these buildings, I completely gutted them. So they had all new mechanicals, all new, everything. And so there isn't really much that goes wrong per se. And when it does, it's fairly simple, in my opinion. So we can take care of it. And so it really hasn't been, in my opinion, that taxing, but I do have some systems in place that seem to make it a little easier on me. Namely, and I guess maybe I should clarify that kind of where it evolved. When I was doing my day job where I had to go into an office every day, then I relied on more brokers to help me rent units. Whereas now that I'm working from home, my wife and I can do the showings, and I don't have to necessarily pay that commission where I had to before, because I just couldn't do it. I actually drove quite a ways to my job. And so now I can do that. So I save on the commissions. But as far as my systems, I use Tenant Cloud, which is my online software. And so that sends tenants invoices. They can pay through ACH directly on the system, or I accept Chase Quick Pay, Venmo, all of that. I do have a few tenants that pay with checks, and but I have them mail in like 5 or 6 checks at a time and just post date them. So then I can cash them on the day instead of waiting and going to the mailbox type thing. But
Nice
otherwise,
little tips there.
Yeah, so that's what I do. Try to make it easier.
Yeah. So nice tips. Making sure you got some automations in place. And I love that idea about having them mail 5 checks at a time, post date them. Do you
Yeah.
get concerned that any of them will bounce, or do you get any pushback from those residents?
I haven't, but if there is question, I try to have one of the things I do with my tenants, I try to have a conversation with them, and I will check in with them. So there's one tenant in particular that does sometimes want me to wait. And so I'll say, hey, can I cash it today? And he'll be like, oh no, can you wait till tomorrow or something else? And I do have a few other tenants like, hey, can you wait this week? I'm going to be short. Can you wait till whenever? And so as long as they're communicating with me, then I'm usually a little more flexible. And I say, you know what, I'm not going to charge a late fee for it this time because you told me, and we can expect it. And it's a few days. It's not a big deal. But it's when tenants kind of go radio silent that I kind of get a little frustrated, that it's like, come on, I don't know what's going on. And both that's on just rather paying rent or the check or anything like that. But there are not too many people that pay by check anymore.
Well, I mean, it helps when you get them all automated, right? Because just like anything else, it's much easier to have all those things coming through automatically. How do you manage your repairs, right? You mentioned that you gut rehab these properties, so you probably aren't heavy on repairs, but do residents reach out to you directly or do they handle that through the cloud system or what?
Yeah, so Tenant Cloud allows you to do the a maintenance request through Tenant Cloud, and then I'll get an email. Or a lot of them, because I do kind of check in with them, and that because I do like to do, the filter changes and those type of things, and I try to do it on a schedule where I can just say, hey, when I'm going to the city because I'm doing something else, like say there is like a dishwasher or a washing machine that has an issue, then I'll try and say time my filters to change them all at the same time when I'm at the building, and so it's I kind of know what's going on with the tenants with that. And I'm always saying, hey, what's going on? Just so I know ahead of time and it's not a big surprise. So the maintenance hasn't been, but I mean, I've learned how to do like a washing machine. The biggest thing with washing machines ends up being like a sock goes over the edge because I have the stackables. And so like a sock will go over the edge and it gets into the tub and then it gets into the pump. And literally it's almost always the problem because they just put too much and it's super easy to do. And you just open the front and I pull out the hose and I pull a sock out and it's done. The hot water heaters, for the most part, when they fail, it's because the sensor is just a little corroded, and you just pull out the sensor at the bottom, you hit it with some sandpaper, put it back in, and it starts up fine. So most of the time, they're really easy repairs. So those are the things I don't normally do.
I mean, you're pretty hands-on. I mean, you mentioned you like to go out and change the filters. I imagine it's not so much that you like changing the filters as much as you kind of want to check in, see what's happening at the properties, check in with the residents, see how things are going.
Exactly.
I'm still trying to figure out how you're able to be so hands-on, right? Because it feels counterintuitive to everything we hear people talk about with scaling, right? They
Yeah.
ask, are you working in your business or are you working on your business?
Uh-huh.
And you look like you're working in the business, but I mean, you're able to get 31 units as well.
Yeah.
So, I mean, you're able to balance that with, multiple, professional obligations on top
Yeah.
of that. So, I mean, how are you managing that time? And I mean, you mentioned the tenant cloud, but are there other tricks that are helping you kind of scale while you manage that time?
Um, yeah, I mean, it's so to me, the biggest time suck is when you're doing showings or you're doing changeovers, right, for a tenant, because my changeovers are the night tenant leaves that night and the new tenants move in the next day. So we don't have any real downtime. And so I need my guys to get in there and clean it. And so at that time, we may hire someone to help a little bit, but for the most part, it's my maintenance guy and his wife. And we use the same paint in every unit, and it's a very light gray, and we actually do the walls and the ceiling all the same. Like, so we don't have to worry about cutting anything because it's so light that it works fine. But we'll do that. But yeah, Tenant Cloud, and then I just my accounting systems that I'll use. But I don't. I mean, there's not that much that really goes wrong, and when it does, it's fairly easy because I stay on top of it. And then if I'm going to go to the city to do something, I can kind of knock it out at the same time. And I guess my buildings are fairly easy to get to, so they're all, aside from the one that's by Wrigley Field, which is more of a pain in the butt to get to because it's so far from the highway. Everything else is pretty close to the highway, and so I live north, and so when I come down the highway, I've got two in Avondale, one in Logan Square, one in Bucktown, and then the ones in Pilsen they're all within a few blocks of the highway, really. So it's fairly quick for me to get to and from all of them.
It's one thing people don't really think a lot about when they're buying properties, but it's like, where do you live and where's the access? Because if you can keep them in a straight line and
Mhm.
you can go and knock them out, boom, 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 much easier to manage versus if you've got to shoot 30 minutes east and then 45 minutes west and then 22 minutes south. I mean, you're all over the place and you're wasting half the time running around the city as opposed to actually checking in and doing the work. So I think that's a great strategy. Just looking at kind of that path, whether it be the path of progress or just the path of where you want to acquire properties and being really efficient in the way you operate. The other thing you mentioned before is that you gut rehab these projects. Did
Yes.
you have any construction experience or how did you just decide to come in and gut rehab?
Yeah. So my first job, I worked for W.E. O'Neill. So it's a large general contractor in Chicago. So I was working on multi-million-dollar major apartment like buildings. And so that was my background. I started in construction management. Then I went into development where I actually built strip malls across the country for someone. And so I'd be building 5 to 10 maybe 8 to 10,000 square foot strip malls. And then my next job, I worked for Bridgestone Firestone and managed all of their construction nationwide for Firestone Complete Auto Care, Expert Tire, Wheelworks. So we were building 60 new stores per year, which means we were delivering a new store every week across the whole country. Plus we'd renovate 200. So I had a massive team. So I ran the entire construction group nationwide. So I had teams of people all around the country. And so obviously I was doing a ton of construction work. So I signed every construction contract. I mean, it was everything. So it's probably a couple $100 million a year we spent in construction. But so I did that. And then when I started buying these buildings, I was buying them because they were disasters. I mean, like one building in particular, all of the floors, so it was a brick building, and all the joists, the center joist in the basement got wet, and so it shrunk, right? I'm sure you've seen that where they get wet. And so every floor above, 3 stories up, they all were sunk in the center. And so all the floors were completely crazy, all the doors. And so everything had to be ripped out, but no one wanted to touch it because they thought it was a structural problem. But the only thing was that basement support beams or support columns. So I got it for like $105,000. This is in Avondale near Milwaukee and Lawndale. So it's like great area. And this was in 2012, I think. But all we did was pulled everything out of the building, and then we just jacked up the joists because they're pockets into the brick, and the brick was fine. And then we just rebuilt the whole thing. But I had a general contractor that I found that I thought was doing a great job, and he did it all. So he actually hired the architect for me. He got the permits. He hired all the trades, and I would just basically visit on the weekends, and that was it. And I mean, send pictures and that kind of thing. But otherwise, it worked out great. And then there's not much to do after that because you're just, if there's a small problem with a furnace or a hot water heater, but otherwise everything's new. And so most of my mechanicals are less than 10 years old even now. So there's nothing too crazy.
Makes a lot of sense, especially with your construction background. I mean, that makes it an easier transition for you. Would you buy properties that didn't need full gut rehabs, or is that kind of your criteria? Is like, hey, I want to tear it down and I want to know everything that's going into this property?
Yeah, I mean, I really like knowing that like all of the plumbing is copper, so I don't have someone worry about water pressure because it's like I have all new copper plumbing and the electrical and that type of thing. So I prefer that. But the one I bought in 2018 actually was built probably in, I think it was 2011, 2012, new construction. And I bought that from the FDIC. So I did that and I was fine with it, but it's rare that I find one that's a deal in my opinion, because I pretty much want to buy it, take all my money back out from the down payment and still cash flow. So like a true BRRRR, I expect that, otherwise it's not worth my time, otherwise I don't want to do it. And so it's rare that I find ones that don't need a ton of work that match that strategy. But this one in particular did, but it's pretty rare.
Got it. So that BRRRR is still kind of your main strategy. Get in, rehab it, get it to the point where it's rented, refinance, and now you've got a great cash flowing asset with all your chips off the table.
Agreed.
Got it. Got it. And I mean, I imagine in today's market, it's a little harder to find that kind of property. Tell me more about what you see in the market today.
Right now, I don't see any of those opportunities. I do feel like a lot of people are chasing very few properties right now. And I don't know if that's going to change anytime soon. I do think at some point it will, because I mean, it's just supply and demand. At some point, there's going to be more supply coming. I know there's going to be, and these prices just can't stay where they're at, because I don't know how people that are buying some of these properties today are making a lot of money. They're not making much. And so one of the interesting things that I would say is that since my first property in 2003, all the way till today, I track how much my rents are. And I can tell you that I push rents as much as I can, both existing tenants and new tenants. And with the existing ones, I kind of figure, I'm going to raise rent pretty much every year. And if they're going to, because they're not going to move out for a $10 or $15 or a small increase, but I will just keep raising it. This year was probably the only exception where I kept a lot of rents the same. But I've only seen 1% increases year over year from 2003 on. And the only difference is if I really did a gut rehab, and that obviously made it, it did a big change, an updated kitchen or something like that with my first property. But for the most part, they're only going up 1%. So if you're buying today expecting 3% bumps, it's not going to happen. And you can't extrapolate these huge bumps, maybe in some markets of the country, but not in Chicago. I've not seen it. at least, and I bought Pilsen, which would have in 2013, which everyone's like, it boomed, right? But when I bought in Pilsen, I bought 2 buildings at 100,000 a piece. I put in 400 into one and 300 into another. And then when they reappraised in 2013, they didn't even appraise out because there was no other comparables. So the banks were like, yeah, they're worth 300. I'm like, I put in way more than that. So I couldn't BRRRR out of it. But now today they're worth, way more, like nearly $1 million probably each. But that's because there weren't any comps then. And my rents I put them pretty high then because I had no other comps, no other properties like that, but they've still only gone up 1% a year. And so, I mean, I just think that's interesting that I don't think people realize.
Yeah, so I mean, think about that a little differently. Is that, the rental market from being able to push rents, it's not like you're getting this 3 or 5% rent bumps like you see in some other markets, right? I mean, you go to the Southeast region, you see people talking about these huge rent bumps. You're not seeing that as much in Chicago. It's not a huge rent growth market right now. But if you can go in and use that BRRRR strategy where you're renovating a property, you're able to, create your own value by doing that renovation, that's where you make your money, right? It's not going to be the year over year rent bumps unless there's something significant you're doing to the actual property. And you mentioned you're pretty aggressive or at least actively pushing rents every year. You kind of track where your rents are at today, where you can get going forward. And you said it's about a 1% rent growth. I love when you talked about the bank, right? And just not even being able to refinance. I mean, sometimes these banks, they don't have the foresight and the vision because they're always looking in the rearview mirror, right? If they don't have sold comps to justify it, they don't see the opportunity where as investors, our goal is to look forward, right? And kind of project where the market's going. So sometimes that's always a challenge. When you look at that and even considering where the market is today, how do you approach the banking situation? I mean, what are you doing as far as your portfolio to kind of maximize values or maximize returns? Given that, while the rents may not have increased crazy over year over year, cap rates certainly have compressed and the values have certainly gone up, as you mentioned.
Yeah. So what I did just this past year is I refinanced everything. I cashed out as much as I could. So I could do, because I have so many properties, they're all residential except for one's a commercial loan, but the other ones are residential. So I have 30-year fixed loans at, they're three and a quarter and 3.5, because I did some little different timing, but which I think is great. And I can do 70% just because I have so many properties, they won't do 80. But I took as much cash out as I could and I actually put most of it in the market. So, and this was actually timed very well because it was during, the kind of the crash and sometime a little bit after that. But that money has made me way more money than I would ever made if it was just sat in the properties. And I'm confident will continue to. So that was kind of the right move for me, in my opinion. And when there is an opportunity to buy a place, I have lines of credit, and I have a few friends that actually end up lending to me when I need the cash. So for a property.
Got it. Excellent, man. Well, congrats on that and being able to time the market a little bit there and taking advantage of that situation. Let's talk about accounting and taxes. So managing your own properties, 31 units, man, that's a lot of accounting and stuff to kind of keep track of. And it's one of the reasons people love apartment buildings is for the tax benefits. So tell me about kind of how you look at that, looking at your portfolio and being able to maximize both the accounting, but, taking care of the accounting, but really maximizing the tax benefits.
So for me, the way I do my accounting is I use QuickBooks and I use a desktop version. The reason is, QuickBooks is kind of the gold standard in accounting. But they're kind of pushing everyone to online. And the problem with the online is you pay per company. And the way I have my properties set up is each individual property is its own company. And I do a series LLC. So with that, I have 8 properties. So I have 8 companies, plus I have my personal company, myself, just my personal stuff. And then I have my real estate brokerage. And then I have a holding company, which is basically set up because of the way Chase QuickPay Zelle works. When they pay you, it has to go into a account. So I go into this holding company and then I transfer that back out into whatever property it goes to. And that's would be eliminated if I got rid of Zelle, but everyone in Chicago uses Chase, so it's kind of like I have to. So with that, I don't want to pay for all those accounts on QuickBooks Online. So I use a desktop version, which you pay once and you have to renew it every 3 years, but then you can use it for all your properties. I did look at Stessa. I think Stessa is a really cool program. The problem is you can't do anything with, for instance, my holding account, my real estate brokerage company, and personal. I can't do it. So I still need another accounting program. So I'm kind of like, why would I do Stessa if I got to do another program anyways? So that's kind of why I stick with QuickBooks. And because they're all set up in their own company, when I log into that company, I have the credit card, and the Chase checking account, so that all of the transactions, whenever I go to say Home Depot or I get something on Amazon, I use the right credit card for which building it's for, or if I have a repair guy. So when I literally go into QuickBooks, I'm literally just checking okay, because once I've assigned that vendor or that, whatever it is, it already knows. QuickBooks remembers. And so I'm just saying okay every time I log in, and it's super easy. And then at the end of the day, you just print the report, and I just send those reports. Basically, I summarize them and send them to my accountants, and they know kind of, we have a system, but all I do is I list all my major transactions. I care about your refinances, if you bought anything, if you sold anything, that type of thing, your statements. And it's pretty easy, but I know what they're asking for, and they also have the report from last year. And so you just kind of fill out what it was compared to last year. They do the depreciation for me. Then one thing I do know this year is that your meals and entertainment is now 100%, whereas last year in prior years it was 50%. So if you go out to dinner to talk about a property, or whatever you're going to do, or a renovation, and you charge the meal to it, in the past you only get 50%. Now you can deduct 100% of that meal, which is kind of cool. So I do that as well.
Nice. Thank you for that tip. I mean, it sounds like the desktop version is better if you have multiple properties or multiple LLCs, as opposed to the cloud version, the online version that's available. So really good tip for anybody looking to do their own accounting. And quite frankly, even if you have a CPA or an accountant, you still got to hand over your books and your documents. So probably easier to have it organized via that version on desktop versus, just throwing somebody a bunch of receipts. And by the way, it's tax day, right? So I mean, if you haven't gotten your taxes done, hopefully you filed an extension, but you're not waiting till right now to to go ahead and get this information over to your accountant.
Yeah, one of the things I would say is that when I when I do the accounting, because I have it so detailed already, my accountant, I feel, is very reasonable for the cost, because I think I pay maybe $2,000 to do all of my taxes, which I think is quite a bit. I mean, it's a stack, but because I have it so well broken out, there's very little. They just kind of put it in the boxes, review it, and they don't, in my opinion, don't charge me that much comparison to what I know some other people pay when they haven't put it all together like that. So
Yeah, you're easy money, man. We get yours in, we can file yours and
uh-huh.
in a little bit of time and get done with it.
Yeah.
All right, let's open up. I have a few more questions I want to ask, but I want to get to some of the questions from the audience as well. Real quick, one of the first questions here from Jackie. She says, "Are each of the property owned by their respective LLCs?"
Yes. Uh, and I actually, it's funny, a lot of these things I did have little videos on where I show you how you actually do a quick claim deed in Chicago, and walk you through all the steps. Because when I did the refinances, I have to put them into my own name because I'm getting all conventional loans and Fannie Freddie loans. And Fannie Freddie recently did change their rules where they don't have a due on sale clause anymore if you transfer it from yourself to the LLC, as long as it's the same ownership. And since I do own the LLCs myself, it's just basically to myself in an LLC. And you can do that quick claim deed. And I actually create the quick claim deed myself. And then I go to the and do all the stuff online, which you have to get the water cert and do the P tax and all the other stuff, and then go and file it at City Hall. I mean,
Nice, awesome. And I didn't realize that they had changed that rule in the quick claim deeds.
yeah,
That's good to know.
both
Excellent. Thanks for
Fannie
that.
and Freddie. Originally Fannie did, and then Freddie just did it recently.
Awesome. Good to hear. All right. Danny says, "Hey, what other return metrics are you looking for with the exception of being able to pull out your own money back after refi?"
I mean, that's basically the thing, is like, I want to get all my money out, or a majority of my money out. If you want to look for another metric, I guess I would say I want to do at least, I want to get my money out, and I'm kind of targeting at least a $500 per door monthly income, like net after all my expenses. With my money out is kind of my goal, and that's kind of my last one I did in 2018. Did that? It was close to it. It's like 8,000 or 9,000 now, but I've actually refinanced it twice since that. But yeah, I don't know if that answers your question directly or not.
No, I appreciate it. He also asked, "What is your business plan moving forward? Are you looking to do commercial properties, or are you looking to stay in kind of the residential 2 to 4 unit space?"
Well, I love the 2 to 4 unit because I love the 30-year fixed loans. just because I really like that security, knowing that I've got a loan for, say, right now, 3.5% for the next 30 years. And that just gives me a lot of, makes me feel good, because my worry is when I do a 5 or 7 year and the market changes and I don't want to have to bring money to the table if I refinance, because if your appraisal's down at that time, you got to bring money to the table. And that's kind of my worry with the commercial loans. And if I have, say, 4 or 5 of those and you time it poorly and the market goes down and you got to bring a lot of money to the table, that's kind of a scary proposition. And that's my worry with the 5 or 7 year loans with the commercial.
Another question here is, do you use any tools to estimate rehab costs? And do you have any strategies or tips to select good contractors?
So yeah, I did a video on contractors, which I definitely would recommend watching, because I talk about how you want to look at bids. And the funny thing is, when I work for a contractor, you basically learn the tricks of how you kind of get a job, whereas you may not always know what you're getting into. And because if I know what you're asking for, I can price in something. For instance, if you tell me the tile you want, say you want this special tile, and I know it's $5 a foot just to buy that material, I can instead say I have an allowance of, say, $3 a foot in my bid. And you might not catch that, but now my bid, and especially if you have a lot of tile to do, my bid's all of a sudden lower. But I put that allowance in that you may not realize, or that's my number that I'm using. And the other guy who might be completely honest with you and says, oh, you said you want this one, it's $5. I'm going to put in that $5 price, but his price appears higher. And so you go with the guy who's lower, but then as soon as you start the work, he says, oh, well, I only have $3 for this tile. So now here's your, the change order. And if you didn't watch that, you're kind of screwed. But that's something you want to watch out for. So in contractors, the biggest thing is really recommendations, as who's used them before. Did they have a good experience? Because no matter what contract, I found this just in business. If someone, and this is just like a side tip, I guess, if someone argues about the contract and all the details, just run. It's not worth it. Because if they're already arguing before the job starts, you're not going to have a good relationship. Because for the most part, nothing goes to court, right? You end up settling for whatever it is. So you're going to have to talk to the person. You're going to figure it out. I mean, even in big companies, the same thing. They settle out of court. You're not going to go to court over these things. So the contract is only, to guide you, but just if the guy or girl, whoever it is, if they're not willing to work with you and talk to you about these things, I would just run. I mean, so to me, get good recommendations and someone who's just, it's not like you're just on a handshake. So you do want to have things that are like, here's the dollar amount, here's the schedule, here's the penalties, that type of stuff. But for the most part, if they're going to argue about all these little things, you're going to be in trouble, in my opinion.
No, great tips there. Appreciate that. Zach says, when you look for $500 a door after expenses, are you including vacancy, CapEx, and I'm assuming reserves?
So it's funny. I don't include vacancy ever, to be honest. I think it's silly. So for instance, right now, I can say the Chicago market right now is soft in rentals. I've had to drop rents on some of my rentals right now. And even though I see a lot of people, they're coming to the city. So a lot of the people, my tenants are usually younger, 20 to 30s. And so a lot of them have said, I moved out of the city during Corona and now I'm coming back. So they were living with their parents. And so they are coming back to the city, but there were a lot of empty units, and that's kind of the competition, I feel like. So there's not enough people looking, as many units are available, in my opinion. So I've had to drop rents, and I think a lot of other people have as well. So so I kind of lost my train of thought there. But yeah, so I've had to drop the rents a little bit. And Zach, so the vacancy. So, but that's the thing, is I will not let a unit go vacant. To me, so even if my rent was, say, $1,550 for the current tenant, and I have to drop it to, say, $1,500, that's still less than missing a month. So, because if it was at, if I'm going to lose $1,500 for 1 month, that's huge. So you can drop your rent. Basically, I think it's like 8% or something. You can drop your rent and break even. So I never have a vacancy. If I get within, say, 2 or 3 weeks of the expiration of my current tenant, I'm just going to drop it to get it rented. So that's part of it. My CapEx, I don't really plan CapEx, to be honest. Most of my buildings, I put a ton of money into up front, so I'm not really too worried. And so for the most part, most of the things are like, even if I have to do a furnace or something like that, I'll try to repair it, and it should be fine for at least 15, 20 years. And if I have to replace it, it's usually just the furnace, not the condenser, or it's the condenser. It's one of the two. So you're only talking a couple $1,000s max. And I mean, my margins aren't that thin. So to me, I just don't even think about it, to be honest, because I don't know. I mean, I know I'm in a good position because my properties are very profitable. So
Yeah, I think for your business plan, it makes sense, right? And I think the key takeaway is before anyone just takes this and run, like, oh, I don't need CapEx or vacancy, you have to make sure you really pay attention to what Kenton's doing, right? So he talked about first and foremost, he's gut rehabbing these properties. So he's replacing all the mechanicals, all the HVACs, all the expensive stuff, right? So because he's doing all of that up front, he's already taken care of that CapEx. So that's the reason he's saying he's not really planning for it down the road, is because he's already addressed that. And from a vacancy standpoint, he's pre-leasing these units. So when he has a lease that's expiring, he starts showing that weeks out, a month, maybe 2 months before that property is actually physically available. And then he said, hey, if I get within 2 weeks of that end lease date and I still don't have it rented, I'll go ahead and just drop the marketing price so I can go ahead and get that lease and have someone move in. So I don't really have any downtime from a vacancy. Again, if you have a unit that's been completely rehabbed and you know the turn is going to be easy, just a little bit of paint and cleanup, you can do that. If you've got to go in there and replace carpet and cabinets and repair holes in walls and all that, you can't do a same day turn.
yeah.
So you kind of have to know the quality of the unit that you have and the quality of resident, quite frankly, too, if you're going to take some of that in consideration. So I want to make sure no one takes this and runs just because that's what's working for you. And they're like, oh, yeah, well, he moved out yesterday and it's available tomorrow. I was like, no, if you got to put $5,000 of work into a unit, you're not going to be able to have that ready the next day. So just keep that in mind when you're listening to Kenton.
Yeah, I do. And one of the things, I don't have carpet anywhere. I have all hardwood floors. I use the same paint at every unit. So a lot of things are the same. And then I will touch on real quick of how I do my plan for how I turn over. So all my leases are 1-year leases. I never do anything month to month. And then I start 3 months out. So 3 months out, I'll tell the tenant, here's your renewal. Do you want to do it or not? And I tell them if they don't have it signed by 2 months out, then I market it. And I market it on all the free websites, which there's like 10 or so that I use that are free. And then if I don't have it by a month out, then I'll list it on, say, Zillow, and I'll pay the $10 a week fee. And then if I still don't have it, then I'll list it on the MLS because I'm a broker. I'll list it for a little less than half a month's rent. And so by that time, I usually get it, and I'll drop the rent at the same time with those things. But that's kind of my quick process.
All right, so there you go. Excellent. Anthony, I think that probably answers most of the questions there. His last question is about your loan and your loan process. Do you ever intend on paying off the loans completely, or do you just simply focus on the cash flow coming in with the properties?
So that's an interesting question. So my MBA is in finance, and so when I look at the rates, when I'm paying say 3 or 3.5%, and then you actually, because I itemize, so I get to deduct that interest. So I'm probably paying 2.75% to 3%, effectively. So to me, any dollar, I will not pay an extra dollar to that loan because I can put all that money into the market. I'm going to make more than 3% long term. So even if I just buy the total index, a Vanguard total index, I'm going to do better. So that's kind of where I'm at as far as paying the loans. So I probably will just continue paying these loans for the next 30 years. It's unlikely that I'm going to be able to get a rate lower than they currently are. But then again, at some point when the value goes up so much, I may decide to take some more cash out, even if I pay a higher rate, because it makes sense. But for now, it doesn't make sense, and they're all locked in. I'm just going to let them roll like this for now.
Makes a lot of sense. Ken, I want to get to your YouTube channel. You mentioned that you've got a couple of videos. You mentioned the contractor video and just some other videos that you have available. Why did you launch the YouTube channel?
I was kind of just bored during Corona, number one. And I've also toyed with writing a book. I've always had my friends and people ask me like, how do you do it? What do you do? And so I kind of like teaching. I've always enjoyed just teaching people things. And it was kind of interesting because I did that for a few of my jobs a little bit internally in the companies. But so I just started writing some stuff down, and I thought like, this is pretty cool. And so I just tried to put my scripts together, and I thought it was kind of a fun thing to do because it's talking about what I enjoy. This is something I really enjoy doing, and I enjoy sharing it. And there's plenty of people that seem to want to talk about it. So that was kind of it. And so I try to put together things. So I have one that I think is kind of fun. I do a toxic tenant video, which I talk about how I've had some bad tenants and how to deal with them, that type of thing. And then for construction, I say like, how to hire a contractor, which questions you should ask, how to do a punch list. But I've done everything from how to review tenants, how to do applications, why I use Tenant Cloud, all the different things. I try and explain what I do and why I do it. And when people have questions, I can always be like, here's a video. So
I love it. Well, listen, if you want to check out more of that, his YouTube channel is Kenton Knowles. You can just, search Kenton Knowles and you'll find his videos, his page, subscribe to him, check out those videos and give him a little bit of love. Any other questions for Kenton before we move on to some breakouts? I'll give it a good 15 seconds here. Okay. So if you have a burning question you didn't ask, now is the time. Nikki, any questions from Facebook or anything that we missed?
I didn't see anything. Let me just look one more time real quick. I had to keep closing my window for it so it wouldn't get choppy.
All good.
Nope, nothing.
While you're waiting, one thing I would say is that, so since I'm a broker as well, one of the things that I think is kind of fun and interesting is I'm able to obviously throw out bids all the time. So I can just throw bids out anytime, lowball offers, which I've done a bunch of. But the other thing I do offer my tenants is I tell them if they use me to buy a house, because a lot of times my tenants actually are looking to buy a condo or a house, I tell them I'll let them out of their lease on a flexible time frame. So we'll say if their lease is up, as long I tell them it's got to be in the summer. But that way, if their lease is up, say in August, then hey, you want to find a place, we find one, I get the commission, and I still know 30 days before they're going to leave anyways. So I still have time to re-rent it. But the tenants like it because obviously they can get out whenever they want. They don't have to time it properly, and works out well for me as well.
Awesome, man. That's a great tip there. Well, listen, Kenton, I want to thank you for sharing your evening with us and giving us some of your tips and backgrounds and talking to us a little bit about, building that portfolio, how you scaled, how you managed that portfolio, your construction background, a little bit of tips on finding the right contractors, managing that process, as well as really just understanding where the opportunities will be kind of going forward for you and what you're looking for with that BRRRR strategy. So Kenton Knowles is his YouTube channel.